Good morning, traders. Today is the 1st of July. My name is Neville Hornsey, market analyst with YouTrading. And today I'm going to be talking about the Australian dollar versus the US dollar. First of all, I want to start on the YouTrading.com website. And you can see here we have the currency heat map. The US dollar is green against all of the other currency pairs here. And then if you go to the Australian dollar, it is bearish and red against all the other currency pairs. Going to the active trader website, if you open up the sentiment indicator, you can see that 61% of retail traders are bullish the Aussie versus the US dollar. And then if we look to the chart of the Aussie, you can see that over the last 18 months, we've had a big sell-off due to coronavirus. The Australian economy was obviously fully affected by just the shutdown. There was no economic reason for people to want commodities, and that is a severe negative impact on the Australian economy. The Aussie dollar collapsed, and then as the reflation trade came back, you can see that we've made highs all the way back up to 0.8. And if we go to a monthly chart, on the monthly, you can see a 200 period moving average here in blue, and that's what was acted as resistance along with the highs from 2018. Going back to the daily, I just want to mark up a quick head and shoulders pattern. So if we say this was the left-hand shoulder, duplicate that, this is the right-hand shoulder, and then this spike high here in February is the head. The neckline obviously comes through that support, and that's what we've seen recently get tested. So prices broke down below this support here at 0.76 to 0.758. Prices broke down, they retested, and now they're continuing to go lower. I fully expect this swing high here to get tested first, which is from September 2020. But ultimately, I feel that this double to triple bottom support line here, there's going to be a lot of liquidity, a lot of stops underneath there, and that would be a great target for the bears. If we were to do a measure move, you would take it from the head down to the neckline, you would duplicate it, and then you would sort of put it underneath there. So that's the measured move. That takes you obviously into this consolidation period here, which is where I'd imagine trading will get a bit more sticky, assuming that we can get through this old resistance, which is now acting as support. The momentum is still, because it was such a long run up, the moving averages are still relatively bullish, even though that the 20 and the 50 period moving averages are pointing downwards, and I've obviously gone bearish across there. When the green 50 crosses over the 200 blue, then that is another significant signal to bears that this momentum is going to be going on for a lot longer. Whilst the 50 is above the 200, this market sort of structure could act as significant support, and there might be a glimmer of hope for the bulls still left to come. But personally, I think we break down, test this zone here, and ultimately these lows. If you go to the dollar index itself, you can see that we're compressing under a trend line. The swing high from September 2020 through to March 2021 looks like it's going to get tested. A break above, a retest, and a continuation higher up to this market structure is most likely, though the stochastic is overbought currently. And then if we go through all the other sort of major pairs that get affected, we have gold, that's at support. Dollar versus the yen, that's just broken out. So if we go to a daily chart, if I just scroll back a little bit, you can see that we had a move, impulsive move here, and then a really long sort of protracted sort of consolidation over time in this channel. So that's from 2016 all the way through the pandemic lows up to recent highs. We've broken out of this channel. So a measured move of that takes us up to around 1.27 to 127 to $128. And if we move out to a monthly, you can see that, say, this move here was the first impulsive move, then a big correction, and then ultimately, if that was to be a measured move higher now that we've broken out, we'd be at 156. A long way off, obviously, but that's obviously the potential for the dollar versus the yen. Pound versus US dollar is coming into support. The 200 period moving average is underneath, and same for the euro versus the US dollar. Very likely now, because we've taken out the lows here, to test this swing low and this particular rising trend line. We are below the 200 period moving average, so showing the dollar is strong there. And dollar versus CAD seems to be looking likely to go higher again, though there is this period here of balance, which proved to be resistant. So all in all, the dollar is looking stronger. The Aussie is looking weaker. If we go to a chart with some metals, we've got the steel and copper versus the London Metal Exchange Index. They're all pointing down now, even though, well, the only sort of rising part of this chart is the oil. So as energy prices increase, the metals are obviously declining, and that's also to do with the dollar. Okay, so sort of to sum up, Aussie dollar looks like it's going to test lower, a good 100 pips. Keep an eye on these swing lows, this market structure of swing high, and then try and aim for this balance period here. Okay, I hope that made sense, and I'll speak to you again tomorrow.